Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. We were playing with WhatsApp. We're trying to get that on the phone now. So we're just heading in that direction. I opened up all the Google stuff. Now I just have to download it onto the telephone. Let's get to... Get rid of that. Go to that. Let's see what the chat line looks like this morning. There we are. Ooh. And there is Janos. Hey, Janos. Hey, Robin. Hey. Working on that WhatsApp. I'm almost there. I downloaded it on the computer, and now I'm going to put it on the phone. And that's what you wanted, right, Janos? You wanted it linked? Or just on the phone, I guess. Maybe just on the phone. Alrighty. Let's see now. Let's take a peek at... Skip that right there. There we are. You can see there's the dollar index. Dollar index again, kind of a little, it's kind of, I guess, sloppy. I don't know. What's the best way to describe it at this point? At first, I thought it was turning up. I thought it was turning up. Let me just double check. Did I download the wrong thing or the wrong place? Let's see. There it is right there. No, that's it. Yeah, it's heading down. And it's trying to put that pressure on it. It's in that weekly sell for the last 3 weeks. That makes sense there. You can see that. We had an interesting move yesterday. Let me just go to... I was going to download it onto the beta, but I didn't. Let me just bring you to this. This is the 30-year U.S. Treasury bond. And that, I try to blend in the fundamentals, and you can see there it's right on the edge of going into a sell. And then yesterday it was down below it, down here. You can see that it was right there. It was down below it, and then today, because of this beautiful up move again. I mean, talk about a schizophrenic market. It's going sideways. It's trying to make a decision. I guess that's the best way to say it. It's trying to make a decision. Obviously, you say, well, what kind of decision is it trying to make? Well, obviously, it's trying to make the decision of what to do, because it really doesn't seem to know what to do. And so that's the strange part about it all to begin with. And so, in other words, what I mean by what to do is that we have an election coming up. There's a very dramatic divide between the two parties. One is a socialist party, and they are into what socialists are into, controlling the people, so forth and so on, pretending that they're making their lives better. And obviously, if they were, then the Soviet Union would still be here. It does not. That was communism, of course. But we have a very... The other side of the factor is we have a constitutional party more now, not just an American party. So what they do is they really support the Constitution of the United States. And so they're into capitalism, and they're into... let's see. Doc, I looked at your sheet, and I have questions. Namely, what is going on with the VIX? Well, the VIX is... it was funny. It went into the daily sell and then right back into the buy again, I mean, I've always said that the VIX is a lagging indicator. It's not a leading indicator. That's one of the mistakes people make, okay? They make the mistake of believing that the VIX is going to warn you of problems coming, and it's no. What it does is it shows you that people are already into the panic. That's the problem with the VIX. So, and then the options themselves are European options. They're not American options. So what happens is that on a given day, if there's some wild action, the VIX options don't always move the way they should for their delta, because let's say the option expires in 6 weeks. Here, let me show you something here on the VIX. Now that you've opened that door, let's make today's conversation, or the title really, the VIX, okay? Because people call it the fear index, and it's right, to look at it that way, because When everybody's fearful, they rush in and buy it. You know what? When everybody is fearful, chances are it's almost already over. That's what the problem is. All right, let's get the VIX up on the screen. File, open workspace. There it is. Here we go. Now here's the VIX live. All right. Now that's the Dow Jones Industrial Average, the grand lady. All right, right there. There's the VIX live. Okay. Right now, today, it's up a little bit more firmer than it was yesterday. Okay, after that move. And what's so cute is that just one little rally, they threw it back into the sell again. Right there. Let me grab a red line, put it in there. I thought that was funny as all get out. So, and it was all right. You know, it did. It went down the next day, you know. And let me fix this somewhere like this. See if the default straightens it out. Okay, default doesn't. Let's go to 5 because it's not showing you what today is. There we go. Okay, so now there. So it pushed it into the sell here, right there. See that right there? It's a minus 0.5 on plot 1, and plot 4 is a minus 9. So because we used the slow because of the beta on that thing. So it pushed it into the sell here, and then I guess it was 2 days, and then it jumped back into the buy on the 24th. Oh, didn't mean to do that. Let's put that in there. Where's that at? Right there. Clickety-doo-dah. And so it's back into the buy. Let's widen this out so you can appreciate it, and then we're going to contract it. Okay? So what happens is this. You know, it rallies up, you know, whatever stupid data that was it right there. And then it goes back into the sell, and it falls down. You know, just because they started to lift the market or flatten the market out. I mean, the VIX is an insurance type product more than anything else. I mean, all options are an insurance product, but the VIX, which is not necessarily it has an option factor, but it is a futures contract. They can offset, you know, they can offset this stuff with no problem. And so in the end result is that the VIX, as I say over and over, I should put it in there, lagging indicator. You know, it's not a leading indicator. In other words, you don't watch the VIX and think, oh, it's going into a buy. Maybe volatility is going to expand. No, volatility is already expanded, as you can see here on the short term, on the intraday right there. Or not intraday, daily. So it goes into the buy here. We're still in the sell here. It's starting to get up to the manifold there. You know, it's starting to show life. But what I really wanted to emphasize more than that is 2 things. First of all, when you look at it contracted, it can go into a sell and stay there for, you know, it looks like the great experiment. And sometimes it can go into a position like that for like a month and a half. It's nothing. And then it goes into a daily buy. Notice, you know, 4 or 5 days. It goes into a sell again. I don't know. It's a dozen days. All the way out to here. It gets finally into a buy here. Lasts for 2 days, and then boom, it's back into the sell again. You know, this product overall. You know, I heard. I have to. There are so many things in my head when I have these conversations with you, with everybody. You know, with the Guscapi listeners, that I heard a money manager yesterday go, "Oh, I've been buying puts, and finally they made money. They're making money now." You know, it's like, you know what? Sell calls, buy puts for almost free, and if the market collapses, you're hedged. If the market doesn't collapse, roll the call out 3 months, you know, and get that premium back that you paid for the put. I mean, it's not that complicated, but people give money to these people that have no idea how to hedge when they're claiming in their manifesto that they're going to hedge. And then I remember when I had my hedge fund was, you know, was listed as a long short hedge fund. Do you know how many long short hedge funds out of 7,000 hedge funds there are? Like 4. I was always stunned in the ratings. It was like, when they rated hedge funds, I forget who it was, one of these rating services, and I saw our hedge fund there. We were number 4 out of the whole. I mean, in other words, there were 3 others, and a lot of times we were ahead of everybody. Long short, everybody claims that they're hedging, but they're not hedging. They're willing to hedge. They just won't do it. It's like, oh, I'm going to hedge. Okay, great. When? When we need it. Just like this index. That's what it comes down to. The index itself has a natural tendency to be used during the storm or after the storm, but not before the storm. So in other words, you got an umbrella, it's pouring outside, and you go, I think I'm going to use the umbrella after I get out of the car, but I'm going to walk to the car with the umbrella still not expanded and covering me. Okay? So that's the best way. Let me look at what you were saying here, namely what is going on with the VIX. You have it in a weekly buy, and yesterday market as a daily buy. Okay, yeah, and it's up today. Okay, yeah, there it is. And so Yana says, I looked at other sources. Someone has bought 20 calls and sold 30 calls. That's not a bad idea. That's called a, well, actually, what was the strike price to those 20 and 30 calls? Was the 30 calls a higher strike price? Okay, wait a minute. You said that they sold 30 calls. So it could have been like a bull spread. So they bought the lower call, I'm assuming, and sold the higher call. That's a bull spread. But it's it's a equal delta at some point there. But then what happens is if it starts to keep on rallying, then ouch, it hurts you. Okay, a back spread would be the other way around. You buy 30 calls and you sell 20 calls that are more valuable. So you sell the lower strike 20 times, buy the higher strike 30 times. That's a bullish it's a call straddle. That's what that is. Yes, but your signal shows that it's just starting to move. That thing is again, lagging indicator. It's not a leading indicator. It's a lagging indicator. It's like if you look at a thermometer and it says it's 10 degrees Celsius and tomorrow you automatically assume it's going to be 10 degrees Celsius again. But how about if a cloud and a storm comes through and you're using just the temperature of yesterday to decide what the weather is today, when you're not looking at the storm clouds or the time of the year or how much sunlight we were having. You see what I'm saying? The indicator is a very poor indicator to predict future events. It's only good at looking at what's in front of us now. That's what it really comes down to. So what is the outlook for the VIX? I'm looking for at mid-August. It doesn't give that indication. It's just in a weekly buy now for a second week. And so I would assume as long as it's in a daily and a weekly buy, then it's going to go up. And as long as it's in a weekly buy, I wouldn't be playing the downside. And the moment, notice that's another thing too. When I contract it, look at the trends. This thing I don't think has had more than 3 weeks in a signal in like 10 years, honestly. Watch this. I'm contracting it now. And you're going to see that, in this case here, this just shows a sell there. I'm not sure why it's not backfilling. Let me, I think they changed the index. That's what it was. Didn't they have to redo the index? I think they did. Let's take the cancel. Let's try this again. Instrument. All right, let's go back 1,500 days. Let's go back 2,500 days. Who cares? See what happens there. All right. Close. There's a 3-week one there. Okay, here we go. This was October of 23. We had a 6-week weekly buy right there for that, even with a big dip. Now remember, it's very sensitive. You know, this thing, in other words, it's not a tool that predicts the future. My formula predicts the future, but this thing is pathetic. Here is back in, there's another, I don't know, like 15 months or 15, what is this, 15 weeks in a weekly sell. There's a lot of room there all the time. Notice that's a rarity there, the October of 23, where they were buying it. It ran from 12.5 to 22. So in other words, can it go to 22? Sure. Will it go to 22 for the information we're seeing here today? Not sure. All we know is it's going up. And as long as we're in a weekly buy, it's going up. And once it drops into the weekly sell, it goes down. And those weekly sells are tenacious. You know, like this one here, where that move was in a weekly sell still. It refused to let you get in long. And, you know, it went down and down and down. And then, you know, it stayed sideways to down and didn't take off whatsoever. So, same thing here. You know, it goes into a sell, just stays in there. Even with all these little zigzags, it didn't go into the buy until here. The weekly signal gave it a, you know, confirming signal there. So as long as we're in a weekly buy, it's going up. Will it be there in the middle of August? We'll know the week before, you know, if it's going to be there. That's what it really comes down to. So for every week it's in a weekly buy, you get a closer chance to be up. Does that make any sense? Yeah, exactly. That's why we follow the daily and the weeklies. A bit. It will go up. Yeah, exactly. That's pretty much what it comes down to. In other words, the weekly signal tells you the general direction. And in this case here, what's worse, though, for this product is because the options are European and not American, what happens is that the options do not rally correctly all the time. In other words, they have a short life. They kind of just find ways to roll back over again. And because they know they can't be exercised. American options, you can exercise them. European options, you can't exercise them. They exercise at expiration only. And when you can't exercise something, then what happens is that they don't always make the correct moves. It's like a lagging delta. I guess that's the best way to describe it, is a lagging delta. Right. When it comes to how high, well, you can see, you can do the mathematical mean, you know. So you can see here, it ran to, what was that? It ran up to the 23 area back in October of, what was that? October of 23. In October, let's see, yeah, it's not really showing us prices. Let's see, let's go back 2,500 days on this thing too. There. See how far back it goes now. There it is. That's why I missed J4X. There's 80 volatility back in, you know, the at the top in the March, you know, where it was, you know, where we talked, where I was screaming and yelling, there's a V bottom. There's a V bottom coming. You know, we're in the V bottom. We're in the V bottom. You know, I was like, that was like continuously, you know. So, let's see, what else? Let's go like that. Get rid of that for the time being. I got all these what apps things I'm trying to download right now at the same time. Let me do this. There it is. Okay. So I think that, can it get to 80? I guess if we go into a calamity, if there's issues, major issues. So, but overall, it seems like it gets up, and there's the 40s there, back in June of that year. And then that's because they were locked in, they were using 18 as a support. I'd imagine that 18 is kind of like that 5,591. I think it's a good support and resistance area. And so then they broke down there. And now, I guess where we're at now, we're at the 18s now. And you can see no more than about a month back in April, we had jumped up to the 21.5, 21 and 3/4 area. So, what was the question? I think you said something about kind of get to 20. Let me just go back to that again. Oh yeah, but no idea how high. I'd say this range here. That's what I would say. In the low 20s. I would think that would make sense. Maybe 1975 to 21, something like that. Anywhere's in between there. But that's the problem with the options. Because they're not exercisable, it makes it tough. You got to do it as a binary. It's much safer to do it as a binary. Does that make any sense? All right. National Grange. All right. We're getting all kinds of messages this morning. Okay. I hope I answered your question there. And see, the problem of it all is, what's the problem of it all? The problem of it all is that it's not a leading indicator, and people assume it is. Just because it's being bought, they think, well, the world's coming to an end, and then all of a sudden it goes back into a daily sell. And then the weekly joins in, and next thing you know, it wasn't predicting anything but more of a what is in front of everybody. Yeah, and I was out there in the middle of the field yelling, where I was working on the plants, and I was like, I'm listening. I have a Bluetooth thing going on with the financial channel, and I'm hearing this money manager mumble that stuff, and I'm thinking to myself, why do you do that? Why do you buy naked puts? Why don't you just go sell calls, buy puts, and go on vacation? Why do you make yourself nuts? Why are you so paranoid? They have such a upside hunger. They all want to buy something and it'll go up 200%, and they don't want to sell the calls. Those calls are priced correctly. When like NVDA and so forth, they're priced correctly. So you go out and sell a call for $30 that normally would be $3, and you can just roll it and roll it again until it finally comes back into the range, and your stock is going up because you're long the stock. And it just, I don't know, I find money managers in general, they invest like it's 1974 or younger. They don't invest like it's 1975. I had a phone conversation with a trader in London about 2 weeks ago. And he was saying that, his job is to do swaps, and he was looking for some advice. And so I was talking with him about it. He contacted me, and he was, and I said, trade them as straddles. Stop trading them like as if you're going to predict where they're going to end up. Trade them as a straddle, and you'll keep more money, and you'll be less in harm's way. Everything should be traded like a straddle. Put a back spread on 3-2. I don't know. Make it cheap. Put the straddle on cheap. And this way, at least you're not getting your head handed to you if some black swan occurs. And so pretty much that was the gist of it all. Trade everything like it's a straddle. Make it a call straddle if you're risking the call side on the upside. Make it a put straddle if you're risking things on the downside. I mean, just get the gamma, get that delta in case there's a black swan or some odd event. If you're hedging swaps, hedge it right. This stuff where they take enormous risk by buying a call that only goes a certain limit, and then they're stopped out. It's insane. It's irresponsible. I said stop investing like it's 1974. Invest like it's 1976. Let's see. Just to measure how much certain time. I say VIX long indicator. I say. So I have never seen VIX as a leading indicator. Okay, it just measures how much shit has hit the fan at that time. Yes, exactly. You're overcomplicating it. Most brokerages do not allow retail anything. Well, no, this guy's he runs the trading desk. So, Interactive Brokers tells one to buzz off if there is no prior trading volume on the naked stocks. Yeah, I don't blame them there. Illiquidity is the death. We call that the cockroach hotel. You can get in, but you can't get out. Europe changes an arm and leg for naked options. Does not allow to sell them. Right, I hear you. It's it's classic, irresponsibility, pretty much. I mean, I guess in the end result is that they don't. At one time in America we had listed options, and those listed options got outlawed because there was no computerization back in the 1830s and 1840s. So they outlawed them, and it had to be over the counter. I mean, that's pretty much Europe is like over the counter. Like our viewers, we switch off as you start talking about solutions that are available to the average Joe across the world. Right, I hear you. That makes sense. That makes total sense. It's just a reminder that the big players not only get inside information, but also the tools to play anything with being 100% safe. Well, yeah, I agree. I agree. But you know what? This guy ran a swap desk for a major firm, and he wasn't doing it even right. That's the amazing part. It blows my mind. Hell, think about it. Like Deutsche Bank and Citibank had, before the collapse of the global financial system back in 2009, late 2008, they had, I think it was, Citi was competing with Deutsche Bank, and so they had like 61 trillion, not billion or million, but trillion in swaps. And Deutsche Bank had something like 63 or 65 trillion in swaps. They were the leading swap house, and no wonder they're basically out of business, both of them. If one has all the tools and not using them, he is an incompetent. Yes, exactly. I talked to him for an hour and a half trying to explain to him the concept. He understood the concept. He said he'd never thought of it that way before. I was like, well, think about it. You're putting on risk. The idea is you're supposed to take off risk. So, and so the VIX itself is, it's like a thermometer. It tells you what the Celsius is today, but it doesn't guarantee that it's going to be that tomorrow. It can be, but it doesn't, Meta. Let's go simple stuff. Weekly and daily signals. Okay. Now, Meta. Let's see what Meta looks like here. Where is that at? Got to open that up. Let's take a look and see. Meta. Right there. All right. There is Meta right there. Meta's been pushing it for a while. I guess it's in the third week of a sell right there. Is it what is it on the spreadsheet? 2 or 3? But it's, we went into the sell off of this top in here, and oh wow, it was 500 or something. Huh? So yeah, I don't really trade the Meta anymore. Didn't really pay attention to it. I've become so enamored on the indices. The indices are just easier to deal with. So yeah, Meta, which seems to be, they make a lot of money. I would think, in many ways, Meta is second to Apple, Nevada, obviously took over the number one position for a couple days and then fell back. Apple took off to the 230s area. Let me put Apple up there too. Apple's been in a daily sell for like all this move down from the highs. But the weekly, the fast got in there at the beginning of this week, and the slow is just barely touching. Look at that. Just -9. And when you really think about it, when you scrunch up the chart, it's not exactly like the world is coming to an end. It came up no more than 3 months ago, May and June and July. The beginning of May, the product was trading at $180, right? And it ran to $230. So when they back it off to, where's it at now? $216. That's not exactly like the world is coming to an end. That's the other problem. We have too many people in the financial community's media side. And, well, no, let's just leave it at that. The media side. And like, they make it sound like the world is coming to an end when, in fact, the stock over the last 3 months is up, I don't know, 30%? Think about it. At the end of April, right, the stock had been down in the 165 area. It ran to 200 and, where'd it go to? It went to $237 from 165. What is that? That's like, 42%? I don't know. And so now it's down like 4% or 5%. They act like the world is coming to an end. Isn't anybody allowed to take a profit? Is the whole world have to be a pyramid all the time? Don't they put people in jail for those things? It's like it goes on and on when you're talking about volatility. There are so many avenues of monitoring the volatility. The rationale of what it's done for the last half a year or 3 months or 1 year, and then look at the down move. And if it's been up like 70% and it's down now like 9%, that's profit taking. Now when it was up 70% and it's down 71%, obviously there's a problem. Okay, they're giving back all their gains, and unfortunately, the news media, the financial news media in particular, has a very poor way of describing what is going on. It's amazing. There are times where we're down half a percentage point, and they're acting like the world is coming to an end. And we've been up, I don't know, like 30% for the year, and it's down half a percentage point in the middle of the trading day, and it's like, oh my God, they're selling the stock index hard today. It's like, no, it's just vacillating. That's all. All right, your algo caught the move beforehand. Yeah, that's the whole trick about that. It does that 86% at a time out of 100. Another interesting one. Oh, okay, let's go over to that one. Let's take a look. Oh, that's Meta. Okay, we did that. At a minor high. It has still room to go if fundamentals change. Right. Your algo showed us yesterday 1 week sell and 1 day sell. In what was that, Meta? Okay. 1 week, yeah. Let's go back to Meta. Yeah, that's right. It's 1 week sell. Did it go into the sell there? No, it did not. Yeah, so that's 1 week sell, and this is the second week. Yep, that's right. And you can see here this morning, it seems like it's a little bit higher. Nothing major. You know, what's that? $2.5 up at the moment. You know, after falling, I don't know, what was it? What did it fall? The close there was 488 basically. Let's say 489, and it closed at 489. So 48. Is that 60? Yeah, that's 61. Okay. So 89 and 61 is 28. So it dropped $28, and so it's up. You know, it's like up $2.5 today. You know, that's a dead cat bounce. That's what they refer to as a dead cat bounce. Does the algo indicate that it will continue to go down? As long as it's down, yeah. As long as the algo is down, because it's a predictor. So in other words, it's a leading indicator. Actually, I call it the super leading indicator, because it's not only a leading indicator, but it can be a leading indicator 3 days ahead of time. Sometimes I look at something and I go, uh-oh, it's in a sell. And then you can see that the weekly is sliding into the sell. And I'm like, what's coming up? You know, I go look to see if there's news coming into the future, or if there's a dividend, or, you know, something coming in, you know. And, you know, and that's really what it comes down to, is that it's accurate about 86 out of 100 times. You know, so it's got a high percentile of success. With that one, you can constantly follow it, and you're always going to be in the plus over a longer term period. In other words, over a 2 month period or 3 month period, or you know things like that. You know, in other words, it always gains it back. You know, when it gives up money, it usually gains it back, especially after a big gain, then a loss. Then it'll, most of the time, it'll give it a gain. And if it's a big loss after a big gain, and then usually it'll gain it back in 1 or 2 trades again. That's that 86 out of 100. Let's see, bottom question. Okay, so basically, when we're talking about volatility, it's better to watch the individual volume of the options and the individual implied volatility of the options. Like, so in other words, a stock indice or an individual stock, or things like that. It's better to use the mathematical mean on those. They're much more predictable as a future value. Matter of fact, if you look at the straddle, we've mentioned this many a time to understand the volatility, and we've shown you miraculous moves. What you do is you look at you have a product, and you look at its at the money call and at the money put, and that'll give you a good idea where things are going. And it will adjust, because individual products are much more accurate than the VIX itself. The VIX is a combination of the in the money, at the money, and out of the money call, and the same thing with the put of the S&P 500. And so you're really looking at the VIX of the S&P 500. And there's a VIX for the Tech 100, and it's the same way. And when you look at the straddle is probably, the at the money straddle is probably the most accurate. It tells you what the market makers are thinking. See, that's the key right there. And so they're going to be adjusting a lot more than the VIX itself, especially with the VIX not being a early exercise. It's a European option. So I don't know how they ended up naming them. I think the first Amsterdam options were European, and then Amsterdam started to have American style options that were automatic exercise. You could exercise them at any time, and so that's how we ended up calling non-exercisable options European and exercisable options American. And I think it had something to do with, because the Amsterdam was a great options exchange. There were you know how I went from options exchange to options exchange around the country, setting up new operations for my what do you call it? My fund, a proprietary market. We were market makers, so we were setting up market making operations around the country, and I would be the lead guy to set it up. And so, only Amsterdam was their traffic. In other words, you would meet people from Chicago, people from New York, people from San Francisco, where the four major options exchanges were, and people from Philadelphia. They were the four major options exchanges for 3 decades. And so, but you would run across Amsterdam traders. Amsterdam traders would be in Chicago or in Philadelphia, or so forth and so on. I remember this one Amsterdam trader. He would fly back every 4 weeks or every 3 weeks just to get his hair cut. See the family, do whatever, but go fly back for a haircut. So I got to go back for a haircut. Okay. And so, when dealing with volatility, probably the best way of all is look at an individual product that you're trading, like Meta and so forth, and look at the straddle, and that will tell you the good and cleanest predictor. And the VIX is probably the worst predictor because it's not exercisable. All right, I guess I've gotten that out of my system. Was I too long in the tooth? Janos, if I get too long, just say something and I'll stop. I don't get it now. Let's see. Bottom question does not again indicate that it will continue to go down. Right. We got both showing that the Meta should go down. Matter of fact, we could look at the straddle. Look at the straddle and see what the straddle is. Don't they? Do they have earnings coming out soon? A lot of these techs have had earnings. I think is it Amazon today or tomorrow? Some of the significant 7. Let's take a look at the straddle. Let's see. Can I get it up on the screen? I guess I can. Let's do it this way. All right, let's get Meta up there. All right. It has Nevada options in it since the last time we had this conversation. Let's see right there. And that's Meta. META. What is all this junk? Is that it? Alright, so let's see if we move this over to you guys like that. Damn, it's too big. Alright, let's shrink that down a little bit. There we go. Alright. There it is right there. Let's see if we can put this in perspective on the screen. There we go. And so there's Meta. And where's the stock at right now? Where is it? It's at 465 at the moment. Okay, so it's up a little bit more now. They're lifting it up a little bit. So let's look at the August. 465 August. Let's change the strike prices too. I want 460. There's the 465 call. It's basically 24. And let's see what the put is. Where's the putties? 24. And the 465... .465 put is 27 at 31, so that's 29. So 29 and 24 is 53. So you take a look at that. You can see the implied volatility on the right side here. The implied volatility is 49, and the let's see what the call is. Implied volatility is 56. So, so basically they're looking for a move up into $50 range basically. So in other words, if you're playing this product, if you're thinking about buying something to be long it when it goes into a weekly, in this case here it's in a weekly sell. So you'd be thinking about buying a put spread. So you'd be you could buy something like $25 or $30 lower, like the 430 put, and go sell the 415 put or something of that nature. Let's see what they price that at. There's how do I get rid of that big number up top? I don't use this anymore, but it's a good tool. Let's see, filter, edit. Okay. So here, where's that? The August. We were looking at the August contracts. I guess we were looking at the very first August contract. 465. That's the first. We must have been looking at the second. Let's see what the second week. The second week, 465. Offered at 24 and 23. Yeah. So it was the second week. So you're talking about, in this case here on the put side. Let's find the puts again. So the binary in the second week, where are they pricing these options? Open interest. There's the 465, 21. Okay, so say the 450 is $20, and the was it the 455, and then the 445, $5 to make $10. That's pretty much what it comes down to, or $4.50 to make $10.50, 2-to-1 ratio. So that's the you can just get a certain. Let's see, is it give it a naked option way? No, I'm just looking at it on the spread binary, since most people inside everything. Oh, and by the way, until 3107 to move the administration of this channel to WhatsApp app. We got until 31. I'm a little confused about this. I downloaded it on the computer. So what are we going to be doing? What, communicating with each other through it, or we're dropping? Are we dropping Google? Huh. Yeah. What's going on? Are we dropping Google and going to WhatsApp? Is that what it is? We are dropping Skype. Okay. Okay. Well, I've been loading the app, WhatsApp, on my computer, and I guess I link it to my phone, right? I think that's what I'm doing at this point. So I've downloaded it on the computer. Now I'm going to be putting it on the phone. We were the exception for years and used Skype. I see. Okay. No problem. I see. From Microsoft to Meta. Okay. We'll get that straightened out. Like I said, I've downloaded it already onto the computer. So, and I guess it has to link to my telephone number. Same crook stealing data. Yeah, really. Okay. Why don't I do this? Where we are, we'll talk on the Skype about this. But let me give everybody a view of what am I giving everybody a view of? Let me give them all the charts so they can, for those that go to the video and watch the charts. Let's do that. All right, so let's go to, is that it? Yeah, that's it. No, that's not it. Ducoscopy day week. What is that? How the hell did that? Oh, okay. Let's show you the, here we go. We got to open that up. Ducoscopy day week. Open. There we are. Let's open that up instead. Yeah, I'll talk to you on Skype about it so I can understand it better, because I'm linking my iPhone now to my WhatsApp. I guess that's what it is. WhatsApp. Play on words as usual. Close that. Yes. Close that. Close workspace. Yes. All right, here we go. And so here is, let's give you the euro. Here's the euro. Still in that sell and a weekly buy. Cable. Same thing, daily sell and weekly buy. Swiss, daily sell and weekly sell going into with no problem, especially this being Thursday. Yen, same situation, daily sell, weekly sell. Turkish lira, starting to lift it back up. It's still in the sell, but it's still in that weekly buy. South African Rand is in a daily buy. That's no wonder gold is going down. You can see it in the weekly buy. Matter of fact, when we shoot over to, let's go take a look at the metals real quick. Like a bunny, we're going to take a look at the metals. And so there is gold. Gold is selling down today. It's been in the sell for a bunch of days. And the weekly is still holding up. The fast is dropping underneath at the moment. Silver, on the other hand, is in a weekly sell for a second week now, and they smacked the doodle out of it, and it's been in a daily sell now for 8 days. And Mr. and Mrs. Copper trying to make a little bounce up, but you know, it's a second week in a sell, and it's been some crazy number now. 5, 10, 14 days now in a sell. Platinum, same thing, lots of days in a sell and in a second week in a weekly sell. Crude oil in a sell for 5 days now and a second week in the crude oil. And what else is there? I guess that's about it. Brent is the same way. We're almost close to getting it so we can see the Brent in our math again. So I just have to be able to download it on as a CVS file. So we'll be able to do that. And Robin, I've got this all the others updated for you. All right, traders. It was a day of volatility conversation, and that's what we're going to put on there as our headline. What does VIX tell us? That's exactly what. VIX and how to read it. How about that? That would be a good title. Let's do that. Title. All right, traders. Happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our Dukascopy friends. Later. I will see you tomorrow. Tomorrow is TGIF. Thank goodness it's Friday. So, arrivederci.